Hi everyone, before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 May-June Paper 2-1 question number 1. This is Paper 2 which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. And the total time limit for this paper is 1 hour and 45 minutes. Since question number 1 is of 30 marks, ideally you should be spending about 35 minutes in order to solve this question. And in this video as well, we'll be attempting to solve it within 35 minutes. So without any further delay, let's get started. Harun and Rakesh are in partnership. They provide cleaning services for local businesses. They started their business on 1st January 2023 when the partners introduced the following assets. So Harun and Rakesh introduced cash at bank. Then Rakesh introduced furniture and equipment and Harun introduced motor vehicle. The partners have not maintained full accounting records. However, they provided the following information for the year ended 31st December 2023. The first thing to notice here is that this is a service providing business, which means that there will be no inventory. So we will not have any sort of opening inventory, purchases or closing inventory. So in this case, we will not have any cost of sales section. Another thing to notice is that this is the first year of operation for their partnership because they established their business on 1st January 2023, which is the current year. It just means that there will be no opening balance for any of the items. It will be 0. Let's take a look at the additional information. Bank statements included the following receipts. We have cash takings and the receipts from credit customers. So cash takings just refers to the amount of cash sales that we have now entered into the bank account. So these amount will refer to the cash sales deposited into the bank account. And the second one is receipts from credit customers. So this is a payment made by credit customers for the credit sales. So this is the receipts for the credit sales made by the partnership. All right. Now the amounts received from credit customers were after deducting cash discounts of 5%. So this amount is the amount after reducing a discount of 5%. So we can easily calculate the discount amount now. We can first calculate the initial total sales. So total sales after deducting a 5% cash discount will result in the amount of 60,230. So it just means that the total sales was of 60,230 divided by 1 minus 5%. Which results in the amount of 63,400. Now the discount allowed is just going to be the difference between the total sales, which is of 63,400, and the amount that was received, which is of 60,230. So 63,400 minus 60,230. This results in the amount of 3,170, which is the discount allowed. Then at 31st December 2023, credit customers owed 5,508. So this will act as our closing trade receivables. Then before banking cash takings, the partners withdrew the following amounts each month for personal use. Okay, so on a yearly basis, Harun will withdraw 1,200 times 12 and Rakesh will withdraw 750 times 12. This results in the amount of 14,400 for Harun and 9,000 for Rakesh. And remember that these are the amounts before banking cash takings. It means that these are also the amounts for the cash sales withdrawn by the partners. Okay. Then the business does not keep any cash in hand. We will store all of our cash within the bank account. The first thing we need to do is calculate the total revenue for the year ended 31st December 2023. In this case, the revenue is split up into 2 different factors. The first one is our cash sales and the second one is the credit sales. Let's calculate the total of the cash sales. We already know that the cash sales was deposited into the bank account, 9,410. Then we also know that before depositing these amounts that we received from the cash sales, Harun and Rakesh each took the amounts of 14,400 and 9,000 respectively. So 14,400 and 9,000. This will result in the amount of 32,810, which is our cash sales. Now for the credit sales, whenever you are figuring out the credit sales, you can always prepare the sales ledger control account. So we're going to do that here as well. We will prepare a sales ledger control account. And sales ledger control account is equivalent to trade receivables account, which is an asset account. So it means that it will have the opening balance on the debit side. But in this case, we've already acknowledged that this is the first year of operation for this partnership, which means that there will be no opening balance. So we can just start with the credit sales, which always goes on the debit side for our sales ledger control account. And this is what we're trying to figure out, so it will act as our balancing figure. Then we can record the amount that we received from the credit customers right here, 60,230, under the heading of bank on the credit side. So 60,230. The another thing that will affect our sales ledger control account is discount allowed, which we have already calculated. So we can enter this amount of 3,170 on the credit side under the heading of discount allowed. It's 3,170. The last thing we need to record is the closing trade receivables balance, which is given right here, 5,580. Since we've already known that the opening balance will be on the debit side, the closing balance will go on the credit side now. So that is our balance CD with the amount of 5,580. Now, in order to get the credit sales, we first need to calculate the total from the credit side of our sales ledger control account. So that will be 60,230 plus 3,170 plus 5,580, which results in 68,980. And since we only have credit sales on the debit side, the value for the credit sales will also be 68,980. Now, in order to get the total revenue, we just need to add these two together. So we'll add our cash sales of 32,810 and our credit sales of 68,980. This results in the total revenue to have the amount of 101,790. That is all for the first part. Let's move towards the next one. We now have additional information. So bank statements recorded the following payments for the year ended 31st December 2023. So we have paid for cleaning materials, rent of premises, electricity charges, accountants' fees, staff wages, and vehicle running costs. On 1st July 2023, the partners disposed of their motor vehicle for cash, 11,700, which was banked immediately. So this is the sales proceeds that we received by disposing the vehicle. On this date, Rakesh transferred his privately owned motor vehicle valued at 15,000 into the partnership. Okay, so we first disposed of the existing motor vehicle and then Rakesh transferred his privately owned motor vehicle into the partnership. Now, non-current assets are to be depreciated by 20% per annum using the straight line method. Depreciation is provided on a month-by-month basis and is applied in the year of acquisition and in the year of disposal. Okay, for this disposal, we need to calculate whether there was a profit or loss. So let's take a look at the net book value at the start of the year. Motor vehicle was firstly introduced by Harun and its net book value at the start of the year was 16,000 and we disposed it at the date of 1st July 2023. So it means that we used that particular motor vehicle for the months of January, February, March, April, May and June. So we used it for 6 months. We need to charge the depreciation on these 6 months for the existing motor vehicle. So this is for the disposed motor vehicle. We can first start with its depreciation for 6 months, which is also its accumulated depreciation. So that will be our cost, which is given to be 16,000 and the rate is 20% per annum, but we're only charging it for 6 months. So we need to multiply it by 6 by 12. This results in the value of 1,600. Now we can calculate the net book value. That will be the cost of 16,000 minus our accumulated depreciation of 1,600. And this results in the value of 14,400. Now we compare the net book value to the sales proceeds of 11,700. We can clearly see that the sales proceeds is lower, which means that there is a loss on disposal. So the loss on disposal in this case will be the difference between the net book value and our sales proceeds, which results in the value of 2,700. And this will be recorded as an expense within our statement of profit or loss. Then the next thing we can do is calculate the depreciation charge for the year. In this case, we need to include the depreciation of the disposed motor vehicle for the 6 months, and then we need to include the depreciation on this motor vehicle which was introduced on 1st July 2023. So this particular motor vehicle was used for the months of July, August, September, October, November and December, which is again 6 months. So the depreciation for 6 months is just going to be the cost of 15,000 times the rate of 20% times 6 by 12, since we only want the depreciation for the 6 months. This results in the value of 1500. Alright, now we can calculate the depreciation for the year, and this is for motor vehicle. So it is just going to be the depreciation on the existing vehicle for the first 6 months of this year, 1600, and the depreciation on the last 6 months for the new vehicle introduced by Rakesh, so 1500. This results in the value of 3100. Alright, then we do not have any addition as well as disposal of our furniture and equipment, which means that we can use the same rate, because this is the rate for all of our non-current assets, and we can calculate the depreciation for the year for our furniture and fixtures as well. Let's do that. Depreciation for the year, and this is for furniture and fixtures. We can start with the cost given above, and the cost for furniture, okay, this one is furniture and equipment, it's 14,000. Okay, furniture and equipment, we have the cost of 14,000, and this one is used for the entire year, so we can just multiply it by 20%, and this will result in the value of 2,800. Then the rent of premises included a payment of 2,460 for the 3 months ended 29 February 2024. So these 3 months will include the month of December, January and February. Our year end is 31st December 2023. It means that we should not be including the amounts for the next year. And this rent of premises given here of 8,960 already includes this amount of 2,460, which means that now we need to remove the amount for these 2 months. Let's calculate it. For 3 months, we know that the amount is 2,460. It means that for 2 months, the amount will be 2,460 divided by 3 times 2. And this will result in the value of 1,640. So the correct rent of premises, we start with the amount given, which is 8,960, and then we remove the amount for the months of January and February for the year 2024, so minus 1640. This results in the amount of 7,320. Now at 31st December 2023, there was an unpresented check for 430 for electricity charges. So it just means that we need to include this 430 as the accrual at the closing date, and accrual at the closing date will always be added. So let's do that. We can start with the electricity charges given above. It's right here to be 3,450, and this should also include the amount of 430, and this is not included yet because these are the unpresented checks, which is not included in the bank account yet. So the total amount for the electricity charges will be 3,880. Then at 31st December 2023, there was an inventory of unused cleaning materials valued at 290. Okay. So since this cleaning material is not used in the current year, we cannot include this as an expense for the current year. So we just need to remove it from the amount of the cleaning materials given above, right here. So we can start with 11,420. So for cleaning materials, we'll start with 11,420, and then we'll remove this unused material of 290. And this will give the correct cleaning materials to have the value of 11,130. Alright, that is all for the given information. Let's take a look at the question. We now need to prepare the statement of profit or loss for the year ended 31st December 2023. Okay, so we can always start with our revenue. But in this case, since this is a service providing business, there will be no cost of sales. After revenue, we will directly move towards expenses. So we calculated the total revenue in the first part to be 101,790. Let's write it down. So 101,790. Then we will subtract all of our expenses. So the very first expenses in this case is the discount allowed that we calculated for the first part. Let's take a look above. The discount allowed is of 3,170. Let's write it down. So 3,170. Then we calculated the depreciation. So we have depreciation on motor vehicles and then furniture and equipment. And we've already calculated both of these, so let's write it down. So for motor vehicle, the depreciation for the year is 3,100, and for furniture and equipment it's 2,800. Let's write it down. So 3,100 and 2,800. Then we also calculated the correct values for these three expenses, so let's write it down. Rent of premises will be 7,320. Then electricity charges will be 3,880 and cleaning materials will be 11,130. So let's start with rent of premises. We calculated it to be 7,320. We then have electricity charges. It was of 3,880. And lastly, we calculated cleaning materials. And the cleaning materials was of 11,130. Let's take a look above. We've also calculated the loss on disposal right here, which is of 2,700. This can also be categorized as an expense, so let's write it down. We have loss on disposal of motor vehicle, and this has a value of 2,700. Okay, we were also given other expenses which did not require any adjustment, so we can include these at the given value. So accountants fees will be 3,800, then staff wages will be 29,870, and vehicle running costs will be 1,480. Let's write it down. So we first have accountants fees of 3,800. We then have staff wages of 29,870, and we have the vehicle running costs, which is of 1,480. And that will be all for our expenses because we've listed down all the given information. Now we need to calculate the total of our expenses. So that will be 3,170 plus 3,100 plus 2,800 plus 7,320 plus 3,880 plus 11,130 plus 2,700 plus 3,800 plus 29,870 plus 1,480. And this results in the value of 69,250. Now we can calculate the profit for the year. That will be revenue of 101,790 minus expenses of 69,250, which results in 32,540. That is all for our statement of profit or loss. Let's move towards the next part. And we have been given the working section right here. So you need to show all your workings for these three. Then you need to show your workings for the loss on disposal, workings for depreciation charges within that particular box so that you get your markings correctly. Let's move on. We now need to prepare an extract from the statement of financial position at 31st December 2023 to show the current assets section only. Okay, so the first thing that will be included within the current asset is the closing inventory, and in this case we have the unused inventory of the cleaning materials. So that can be included within our current asset section, and the amount is of 290. Let's write it down. So the first item will be inventory of cleaning materials, which is of 290. Then we also have the closing value of our trade receivables within the first part. It's right here, 5,580. So we need to include this as well. Let's write it down. So we have the trade receivables of 5,580. Alright, then we also have a prepayment of expenses in this case. I think this was a rent of premises because it also included a payment of 2,460 for the 3 months ended 29 February 2024. It means that we've already paid in advance for the months of January and February. Since we have already paid for it, we are yet to receive the services for this payment. So this will be included as other receivables. So we've calculated the amount for the 2 months right here, which was 1,640, and this can be categorized as other receivables. Let's write it down. So we have other receivables of 1,640. Then the last thing we need to include is the cash at bank. And we've already been told that there is no cash in hand. So all the cash will be stored at the bank account. Now for the cash at bank, we need to start with the initial cash invested right here. So the cash at bank was 4,000 and 2,000 at the start of the year. Let's do this in the working section below. So for the cash at bank, we'll start with the 4,000 and 2,000 that was initially invested by Harun and Rakesh. Then we know that bank statements included the following receipts. So these will be added into our bank account. So we need to add 9,410 and 60,230. Let's write it down. So we have 9,410 and 60,230. Then we have been given the list of payments made through the bank account. Right here, the bank statements recorded the following payments for the year. Now we need to subtract these payments. Let's do it in two parts. For the first one, let's subtract 11,420, 8,960 and 3,450. So we subtract 11,420, then we subtract 8,960 and then we subtract 3,450. Then we subtract the remaining payments, which is 3,800, 29,870 and 1,480. Let's write it down. So that's minus 3,800, minus 29,870, minus 1,480. Okay, we missed one other item because we also disposed our motor vehicle and the sales proceeds was received into the bank account right here. On 1st July 2023, the partners disposed of the motor vehicle for cash 11,700, which was banked immediately. So we need to enter this into our bank account. So we need to add 11,700. Okay, I do not think we have any other. Oh wait, there was an unpresented check as well within the fifth information. At 31st December 2023, there was an unpresented check for 430 for electricity charges. So after including this, since this is an unpresented check, it will reduce our bank balance. So we will be subtracting this 430 as well. So minus 430. Alright, this should give us the correct cash at bank. That will be 4,000 plus 2,000 plus 9,410 plus 60,230 minus 11,420 minus 8,960 minus 3,450 minus 3,800 minus 29,870 minus 1,480 plus 11,700 minus 430, which results in the value of 27,930. Let's write it down. Now we can calculate the total of our current assets. That will be 290 plus 5,580 plus 1,640 plus 27,930, which results in 35,440. That is all for the third part. Let's move towards the next one. We have been given the additional information. Partnership current accounts are not maintained. So whatever is to be included within the current accounts will be included within capital account now. Then the interest on capital has been agreed at the following. Harun will receive 2,000 per annum and Rakesh will receive 2,350. Then Harun is entitled to an annual salary of 5,000. Profits and losses are to be shared in the ratio Harun 3/5 and Rakesh 2/5. So Harun will receive 3 out of 5 portion, whereas Rakesh will receive 2 out of 5 portion. Now we need to calculate the balance on Rakesh's capital account at 31st December 2023. Alright, so we can just prepare Rakesh's capital account. Since this is a capital account, the opening balance will always be on the credit side. And in this case, this is the first year of establishment. So whatever was introduced by Rakesh into the partnership can be entered as his opening balance. So we have the balance brought down. Let's take a look above. Right here for Rakesh, he introduced 2,000 cash at bank and 14,000 furniture and equipment. So the total introduction by Rakesh will be of 16,000, and that will act as his opening capital balance. Let's write it down. So we have 16,000. Then we have the interest on capital, and interest on capital is something that Rakesh will receive from the partnership. So this will go on the credit side of our capital account. Let's write it down. That is the interest on capital of 2,350. Then previously we've already calculated the drawings for the year, and drawing is something that will have to be repaid by the partners to the partnership. So this will definitely reduce his capital balance. For Rakesh, drawings for the year was 9,000. Let's write it down on the debit side of his capital account. So we have drawings of 9,000. Alright, then later on, Rakesh also introduced another motor vehicle. Right here on the date of 1st July 2023, Rakesh transferred his privately owned motor vehicle valued at 15,000 into the partnership. So this is additional introduction of capital which will always be recorded on the credit side of the capital account. So let's write down 15,000 under the heading of motor vehicle. So we have motor vehicle at 15,000. Alright, then the last thing that we need to write down will be the share of profit for Rakesh, and for that we will need to prepare an appropriation account. So I'll do that right here. We'll start with the profit for the year. Which we calculated before. That will be 32,540. Then interest on capital is something that will have to be paid by the partnership. It means that this will reduce the profit for the year. So we need to subtract the interest on capital. That will be 2,000 plus 2,350, which results in 4,350. And in this case, we also have an annual salary of 5,000, which will again reduce the profit. So minus salary of 5,000, then we will get our residual profit. So that will be 32,540 minus 4,350 minus 5,000. This results in the value of 23,190. Now we only need Rakesh's share of profit, which is 2 by 5th of this amount. So that's 23,190 times 2 by 5. And this results in the amount of 9,276. And the share of profit is something that will increase his capital account. So that will go on the credit side. So that's 9,276. And in this case, the opening balance was on the credit side, which means that the closing balance will be on the debit side. Now, in order to figure this out, we first need to calculate the total from the credit side. So that's 16,000 plus 2,350 plus 15,000 plus 9,276, which results in the value of 42,626. Now, in order to calculate the closing balance, we just take the total and subtract the drawings. So that will be 42,626 minus 9,000. This results in the value of 33,626. That is all for the fourth part. Let's move towards the next one. We have been given the additional information. The partners have considered maintaining a full accounting system using an accounting software package. We now need to advise the partners whether or not they should maintain a full accounting system using an accounting software package by justifying our answer. Okay, this is of 7 marks, so 1 mark will be reserved for the decision, 3 marks will be for advantages of the accounting software package, and 3 marks will be the disadvantages. Let's start with the advantages. The first thing is that it will provide detailed information which will support the management of business. So it will provide detailed information to support management of business. Then the next advantage is that we are currently paying an accountant's fees, but if we are using an accounting software, we will no longer require any accountant services. So it will save accountant fees. And the third thing is that it will have a higher speed of processing data as compared to an accountant. So it will have higher speed of processing data. Alright, now we need to move towards the disadvantages of using an accounting software package. The very first thing we need to consider is the cost of the computer equipment that will be required and the cost of the accounting software package. So there will be additional cost of computer equipment and the accounting software. Then the second disadvantage is that there will be possible training cost because maybe the partners will have to be trained on how to properly use such accounting softwares. So there will be possible training costs. And the third disadvantage is that it is vulnerable to internal as well as external threats such as hacking. So it will be vulnerable to internal and external threats such as hacking. Now, based on these factors, we need to make a final decision. Personally, I would advise the partners that they should maintain a full accounting system using an accounting software package because it will provide improved accuracy over all of our financial details. Let's write it down. So the decision is that the partners should maintain a full accounting system using an accounting software package as it provides improved accuracy. Alright, that is all for this part as well as the entire question. If you found this video useful, make sure that you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.